Hi guys, welcome back to another video. Today we are going to talk about one of the hottest topics in town. And no, we are not talking about elections. What are we going to talk about, Alvin?
Talk about tariffs.
Alright, tariffs. Okay, so as you guys know that tariff has been ongoing for I think about 2 months now. Yeah, about 2 months now. So since the start of tariff war, how has it changed your life? Other than your stock portfolio dropped by probably 10-20%?
I think it's sort of affected a little bit on the Singapore market as well.
Yeah.
Singapore property market.
Yeah, so basically recently I've been getting in touch with all my past clients. I think about 3 of them actually decided to put their property purchase on hold because of the uncertainty, right?
Yeah.
Because I think they're saying that price are going to drop. Do you have any clients?
Yeah, I have. So definitely we have a few lah. So some clients, they're just waiting, they're sitting on the fence. Like what John said, we're waiting for prices to drop. But will Singapore prices really drop?
Yeah, I think with that being said, we shall go into today's topic, and that is analyzing the tariff market, how the tariff war will affect the Singapore property market.
Yeah. So we'll have a few tips lah for you guys out there. Basically, we have a few tips for you guys when you're choosing your own property in Singapore, right? Some tips before you purchase your property to make sure that it is actually a safe purchase.
Alright, so let's go. Okay, so from the slide you can see right here, right, the ongoing trade war between US and China has actually impacted the whole world. It's not just Singapore, right? Okay, because Singapore is a major trade hub and definitely we will not be spared, okay? And the stock market has already reflected the massive drop. Okay, personally, my stock portfolio also dropped at about 20%.
Same.
Yeah, so businesses are unsure about the future and basically everyone are really cautious right now.
Yeah, so that's what I mentioned lah. So a lot of clients right now, because of this uncertainty, they are sitting on the fence, waiting for prices to drop, waiting for developer to give discounts and everything.
Yeah, I think that's very common because last few years since 2020, there's a bit of uncertainty here and there throughout the past 5 years. Every time there is a crisis or market not performing well, everyone will be sitting on the fence. Alright, so to predict what is going to happen next, we will look into the history of the property market. Of course, history doesn't necessarily repeat itself, but it often rhymes. Alright, so what you see over here is the private property price index. Okay, so we won't go so far back to the dot-com bubble and SARS like that. We'll start from the 2008 financial crisis, basically the housing bubble, the bankruptcy of Lehman Brothers. I think that is still fresh in our mind, right? Because that is a big thing in history. So after the bankruptcy of Lehman Brothers, it went down for I think about a year. Yeah, before the bull run continues for the next 4 years. All right. So basically, what we can see over here, this is the collapse of Lehman Brothers, and the market actually went up for consecutively 4 years until cooling measures was implemented.
So because of the fast growth in the property market, right, what our Singapore government did was, right, they actually have to implement multiple cooling measures. For example, seller stamp duty, lowered TDSR and LTV. So it's actually to control the buyers from over leveraging basically on their income and their finances, okay? So they also implemented ABSD to cool the market from 2013 to 2016, and prices continue to pick up from 2017 to 2019.
Yeah, so I think it's largely being controlled by the government, right?
Yeah.
Then of course, the latest, which is the COVID in 2020, right, actually impacted the market for a short period of time.
Yeah.
Right, it's actually shorter than what we really expected, right? Because shut down, everyone went to panic mode. The whole supermarket are all empty.
Yeah.
I still remember before the circuit breakers, everyone rushed the supermarket to empty out, and it caused a lot of panic.
Yep.
Alright, so but then again, prices only went down by 1 quarter. Probably it's just a panic sale, right? People are really depressed about the future, cannot see no light already. Cause no vaccine, no nothing.
Yeah.
Basically, buyers who cannot hold on to their property decided to let go.
Or they're gonna retrench, then they have to let go.
Correct, because
fire sale.
I think airlines was one of them. A lot of industry was impacted during the COVID times. Very similar, uncertainty, market go down. Alright, but then if we look after 2020, right, price actually went up and never looked back.
So what we can see here is that, right, despite the financial crisis and uncertainty like previously, like COVID, right, Singapore property prices still remain very strong, okay? And it's heavily controlled by our government to ensure that we are not in a bubble like Hong Kong, and we are in a sustainable growth lah.
Yeah, still remember back in the days, right, in 2019, 2020, right, we were still selling new launch, right, at about 1,500, 1,600 PSF. While those numbers, although actually 5 years is actually quite a short period.
Yeah,
right?
yeah.
And prices actually went up, 20-30%. That is incredible, right?
Yeah. But although that we are very confident that our property prices are going to continue to rise in the future, but we still have to be very careful, like which is a safe property to buy.
Yeah.
Because in terms of crisis, right, we have to be extra careful. Technically, not anything you buy will make money. Yeah, we have to follow our tips.
Yeah, actually, in fact, yesterday, one of clients who reached out to me in the past, right? So actually texted me yesterday to ask me about the market property updates. They asked him how was his decision, because in 2022, we contacted each other. He was interested in Forex, and I actually asked him whether or not he bought anything since 2022. Then obviously he didn't because since 2022 he said, oh, market slow COVID and things like that, everything put on hold. But I checked Forex transaction in about 4 years. If you bought a 3-bedder, right, you will have profited at about 600,000. Yeah, so it's quite easy money. Consider it's just a 4 years holding period.
Yeah.
All right, and more importantly, progressive payment.
Yeah.
Right, because you avoid all the interest, property tax, which we will cover on later.
I think what is important here is, right, our tips, right, apply to buyers out there who are not using their emergency funds to buy. Like what we are always using to buy is our like spare cash, which we are using for investment or for housing, not your emergency funds. If you're using your emergency funds, then I don't think this video is right for you technically.
Yeah. So basically, this is the objective of today's video, is basically our tips to navigate the Singapore properties market in economic uncertainty. All right, so let's go. Okay, so tip number 1, right, is to go for properties which are less speculative in nature. Although it sounds as simple as it seems, right, there are buyers out there, right, still falls into the trap of FOMO effect. And whenever there's a new launch come out, right, then a lot of marketing, a lot of advertisement, a lot of buyers go to the showroom, then without analyzing the numbers, the logic behind this property, right, people will jump in. Okay, so over here you can see 2 lines. This is the blue line, this is the CCR line. Okay, this is the price trend, and this is the OCR price trend. Okay, you can see that 1819, it was a bull run. So basically OCR, CCR both went out in tandem. But during COVID, right, which is this green portion over here, we can see that CCR prices actually dipped while OCR, right, still maintained, and in fact it went up by a little bit. Alright, throughout the 4 quarters. And of course, 2021 is a bull run. Because why? Interest rate low Yeah, people will just enter into the property market.
As we can see from the chart here, OCR is actually more resilient because there are amenities like schools, shopping centers. Some of you are near parents, near MRT. And another important factor is BTO. Because if you have seen our previous project analysis video, private property, they are located near to BTO or $1 million HDB, right? They often has very good capital appreciation. For example, all these people who exited their $1 million property, they probably bought in maybe half the price. Yeah, so when they exit 1 million, their cash out is easily 500 to 600 plus K.
Which is more than enough to cover the down payment, and probably even have 1 to 2 years installment.
Correct. So this is how they can upgrade easily to a private property from their HDB. And when you're surrounded by all these kind of people, it makes your exit a little bit more easier compared to properties in CCR, whereby they are all of higher quantum and they are more of foreigners who are buying in
for investments.
Yes, for investments.
Yeah, so another point to note is that when interest rate actually went up, right, in 23, right, which is somewhere around here onwards, okay, CCR prices actually went down. Cost speculative.
Correct.
Interest rate go down, the price go up.
Yeah.
Alright, interest rate go up, the price come down. Whereas in OCR, because it's actually for own say, own demand. Yeah, it's just no matter how bad the property market, right, as long as you got the installment ready, it don't make sense for you to sell.
You technically need a place to stay also.
Yeah, exactly.
So you won't sell it unless you are the CCR, your installment is few 10K, 20K a month, then that one tired then people will have to exit.
Yeah, because your kids' school is nearby.
Correct.
Yeah, it doesn't make sense for you to sell. So to sum it up, so tip 1 is to go for something which is less speculative, aka OCR. Yeah, basically near all your needs, all your basic necessities, near BTOs, near your transportations. Okay?
So tip 2 we have here, right, is to actually buy properties that allows you to do progressive payments, which is new launches Okay, so in times of crisis where interest rates are not stable, where it can increase or decrease any moment, it makes more sense to buy property with progressive payment.
Okay.
So why, right? So if you look at the table over here, if you're looking at a 2 million quantum, a 2 million quantum property see new launch versus a resale, right? If you look at the installment here, see this is a BUC over here. Okay, so this is a resale, 2 million. If you look at the installment over here, for new launchers, for those people out there that still doesn't know, right, it's progressive payment. That means, right, when the developer builds to a certain stage, then you start to pay for the installment. It's not like resale. Resale, when you buy ready, after completion, it's straight away 75% loan installment. Like you have full installment kick in ready. So you start to pay your interest in full, then you pay property tax, pay maintenance fee, everything. Okay, so for new launchers, the difference is you only need to pay when it builds. Okay, so as you can see here, the installment difference, right, you can see for a resale property for 2 million, the installment is around 5.8k. This is around 2.something% interest lah. So for new launch, you can see when they are building the foundation, it's only $400. Okay, over here, and it slowly increases, of course, when it starts to build higher and higher. Then upon TOP, 4.8k over here. So upon TOP is still lesser than the full installment paid for a resale property. Okay, so the difference in installment paid, right, actually is around 113,000. Okay, so based on 2 interest rate, this is so much safer because this is progressive payment and minimal installment because instead of full 75% loan, and also you can even choose to sell before TOP as long as you clear your seller stamp duty of 3 years. So that means if you reach until maybe 2.4k installment over here, this side, right? Actually, if it costs 3 years,
you can actually start selling.
You can start selling already.
Yeah, I realized that actually first 2 years or first 2 to 3 years, right, this portion, right, the installment is actually significantly lower. Like it can range up to 3,000 to up to 5,000, especially the first stage. 5,000 plus, which is very, very significant. Alright, because the main bulk of the installment actually comes in during the TOP and the CSC, which is over this period.
Correct.
Yeah, so anything before that, right, if it clears your stamp duty, of course, then I think the profit margin is really very high.
Yeah.
Right? Because you can avoid all the interest, especially in high interest rate environment.
Also to add on, right, so today, right, let's say, right, this is actually new launch is actually quite a safe haven for you to park your money. Okay, but if today you're not gonna buy a property in this crisis, right, you must make sure you put your money to good use. Because I've seen articles going around online like hprop99.co. There are some people who are actually mentioning that what they did was they actually bought a property during COVID period. Yeah, and then they have no regrets because they are saying that if they didn't buy, they wouldn't have do anything to the money at all. Singapore property market is actually quite a safe place to park your money. Okay, so we go on to the next one. So next one, okay, so likewise, new launch versus a resale. But for this is 1.6 million. So let's look at the installment.
It's still very significant, even at 1.6 million.
Yes, 1.6 million, 400k difference in purchase price. The installment difference is around 20k. So 2 million is roughly around a 3 beta budget. 1.6 maybe 2 beta. Yeah, so for buyers out there, if you have this budget and you are considering whether to buy a resale or new launch, these are the figures that you need to look at. Before you commit to a resale and start paying the interest in full, you have to walk through all your options, I feel.
Yeah, correct. Especially if you are somebody who are renting, yeah, then you will have to definitely compare the rental that you're paying and the lower installment. Yeah, whether or not it makes sense. But of course, if you're someone who already have a place to stay, meaning to say your parents or things like that, or you got basically relative, basically a place to stay, then BUC seems to be a very clear-cut choice in this kind of environment.
So tip 2, buy a property that gives you progressive payment. If can defer payment scheme, even better. But defer payment nowadays is only for easy. Okay, moving on
to tip number 3.
Okay, so tip 3, rental demand. So our tip number 3 here is to buy into areas with high rental demands. But of course, you must understand the area demographics. Okay, so in this fearful environment, anything might happen, but that shouldn't actually stop you from buying as long as what we are buying, like what I mentioned earlier, is not with emergency funds, it's with reserve funds. Okay, so you have to try to be as foolproof as possible, buy into areas with high rental in demand. So in any case, right, if there's a scenario whereby you want to sell, but market is not good, cannot choose solar, okay, at least you still can get rental, right, to cover your mortgage, to help you tank a little bit, okay?
So understanding the demand in the area is very important, right? It helps you purchase a safer property.
Correct.
Over here, we have 2 properties, Clavon and Commodore, which is in Clementi and Canberra.
Yes.
Alvin, which do you think is an easier property to rent out and to sell in the future?
Okay, I did the slides, so I know. So, but audience out there, before you see our next slide, which one do you all think will be easier to rent out and easier to sell in the future? You can take a little bit of time to think. Then you pause the video first. Then you can watch our answer in the next slide. Okay, our answer here will be, of course, Clavon in Clementi. Okay, why? Okay, let's further explain. So we dive into the figures to elaborate. Looking at these 2 examples, For Claremont, okay, these are the prices when they first launched in 2021, roughly around there. Yeah, so I took the cheapest unit to compare lah. Okay, so for Claremont, the cheapest 1 bed plus study was 807k, 527 square feet. These prices now cannot find already, guys. Yeah. And for Commodore, 700k, 1 bedder, 463 square feet.
Yeah, so even at 100k more, right, the rental yield is a lot higher.
Correct, for Claremont.
Yeah, because rentability wise, I think everyone knows lah, Clementi. Recently we did an Alta video.
Yeah.
Yeah, so basically all the education, it's basically education belt. Yeah, from primary school all the way to tertiary. Right, so demand there very high. It's near to NTU, NUS.
Yeah.
Rentability super high. Researchers, scientists, all the higher level occupations are all staying in that area. And of course, rental yield higher, meaning to say your prices likely to appreciate higher as well.
Correct. When the demand is high, it's easier to rent out. There's lower chance of getting stuck. That means there's lower chance of your property being vacant in the market. Okay, but if you compare to Commodore in Canberra, so the demographics of this area essentially, is own stay. Canberra is Sembawang, is own stay. Okay, so it's not so much for investment or even bachelors. Okay, in this area, what is crucial here is if you understand the demographics of this area, it will be better to buy bigger units here. Yeah, because Canberra, so many BTOs around there. You can't possibly from a 4-room flat, 5-room flat, then you cannot go into a smaller unit, 463 square feet. And you must understand all these people, they're very used to staying in 900 plus, 1000 plus square feet. These 463 square feet, they step into the door, they will show you say,很小.
In fact, it's not even the 1 bedder, even the 2 bedders or the compact tree. Some buyers don't even want the compact tree.
Yeah, especially the BTO upgraders, right? Yeah. Because they're so used to having a yacht, so sometimes they'll have this rejection.
And most importantly, they have enough proceeds to get a bigger unit. So the demand for smaller units, right? Even though it's cheaper, but they got sufficient.
Correct. So in the north side, like Canberra or Yishun, all this rental play might not really work out in this area. We're not saying that you cannot buy a 1 bedder in this area. What we're trying to say here is, right, if you understand the demographics of this area, if you buy a bigger unit, it's more advisable because it's easier to sell in future and easier to rent out. Yeah, because if you look at the 1 bedder price, 2.8 to 3k rental, top up a little bit, you can get a quite nice HDB in the BTO areas and you get 3 full bedrooms. So we look at the 3 bedders now. Okay, so for 3 bedders, Claremont, they actually enter at 1.45 million, 958 square feet. Guys, this price is amazing. You anyhow throw close one eye, you throw a stone. Now the 3 bedder are all at least 2 million.
This is the 2020 price, 2021 price.
Yeah, but at this period, I think a lot of people are still very fearful also.
Yeah, because COVID, circuit breaker just ended.
Yeah, that time circuit breaker, COVID also, everybody keeps saying price will drop. Wait for price to drop. But price got drop or not? Never.
Yeah, drop. Actually, in fact, in end of 2020, price actually went up. Developers start to increase price because demand start to come in.
Yeah.
I think partly because of the low interest rate.
Wow, guys, then the units were just flying off the shelf like Florence, Affinity. Wow, it's like a vacuum. Somebody was vacuuming it again. Okay. So these prices really quite sick. Okay, so those people who bought in here, they average like 500 plus K profit. Wow, that's like damn sick lah. It's like they want to times 2 at their down payment.
Yeah, our Claremont buyer profited 800 plus.
Yeah, quite sick lah. But kudos to them lah for believing in us and like believing in the Singapore market also lah. So for Commodore, 3 bedder, 969 square feet, slightly bigger, is around 1.358 million. Of course, it's cheaper because the area we are going into, Canberra, compared to Clementi. But the difference in rental here is actually quite significant. For Claremont, it's around 5.5 to 6.2. Okay, but for Commodore, it's around 4.9. But take note, this Commodore, based on transactions I've seen, there's only 1 transacted unit at 4.9k, and there's only 1 unit that rent out. But because I'm very familiar with the north, okay, so this 4.9k is actually, I would say, it's actually an abnormally because the prices there should be around 4.4 to 4.5 for Commodore.
Makes sense.
Yeah, and to be able to hit 4.9 in Canberra, this person must be
probably co-living.
Yeah,
or short-term rental.
Correct, short-term rental. If not, if you're looking for a 1 year to 2 year lease, I don't think you can hit 4.9k because your surrounding projects like Brownstone, Visionaire, they're not too old.
There's too much supply.
There's so much supply there, and they are going at like recently I rented out, I think 6 months ago I rented out like 3.8k for 3 bedder, like with a good view. Yeah, so 4.9 might be co-living, like what John say. They do like 4 bedrooms that they rent out in 3 years. Yeah, the rental yield, even for 4.9, rental yield is 4.3%. It's not as high as Claremont lah. Okay, so talking about profit-wise, being near Nanhua Primary, NUS, NTU, like what I mentioned earlier, the average profit is 500 plus K. Yeah. So Commodore being in Canberra, we are not near any uni. We are only near primary schools.
They're all the neighborhood schools.
Yeah, neighborhood schools. Okay, neighborhood school, but there's no like good school. Singapore government say no good. So, okay. So, John, how much do you think they can profit?
I think the max with Brownstone, Visionaire, and all the EC coming up, right? Probably 200K, 200-ish. I think 300 is going to be tough.
Yeah, if you get 300, I think, wow, good. Like you can get 1.6 million, I think you faster exit because Brownstone Visionaire, there are 3 bidders calling for 1.4. And they are not too bad. The developments are not too bad because Mr. John considered once.
Yeah, Brownstone.
Yeah.
By CDL.
It's like walking distance to MRT. It's really not too bad. Yeah, so for owners out there, let's say you're holding on to Commodore or even Water Gardens, yeah, if you can get a decent price, right, I suggest you all just offload and move on to the next property.
Yep. Okay, so basically understanding the demographics in the area is very important because your buyers is always buying into the area based on their requirements.
Correct. So in Canberra means big size. In Clementi, small size to big size, all can, technically.
Because of the rental demand.
Yes, rental demand from the NUS, NTU people and also the people working around there. Then bigger units appeal to the $1 million BTO surrounding them also. Then also very important to understand the demographics like what John said, and also if they can seek high rental demand or not. Because agents will always tell you buy already if cannot sell, rent out. But you yourself need to understand whether that area has high rental demand or not.
And most importantly, doesn't mean you can rent out 4,000. Let's say for example 4,000 today, you can rent out 4,000 3 years later.
Correct, because now the prices are a bit inflated already.
Yeah, and I realized actually in West Side, right, or rather in Clementi area, although prices went down, but not as significant as I think Canberra.
Correct.
Right, so because there's a true rental demand to it.
Correct. So last time during COVID, I think all the prices went up. I think that period doesn't matter location already. They just want a house. Everybody just wanted a house.
That's right.
But then post COVID, then after that, when everything demand supply start to stabilize, then it start to normalize whereby Clementi will definitely have higher demand.
Correct.
So prices will start to drop in the north side.
Yeah.
Confirm one. So normalize already. So you yourself buyers you need to understand which area will have demand. Okay.
Even though for your own stay, rental demand is still important because I would say directly impact your selling price in the future.
Definitely.
Okay, so to recap the 3 tips that we went through today, number 1 is to buy OCR property. Okay, so Cleveland is OCR property, but Commodore also OCR property.
Yeah.
Alright, doesn't mean that OCR property definitely can buy. But again, it's just a tip because we are comparing with CCR.
Correct.
Okay, tip 2 is the progressive payment because interest rate is not predictable. When interest rate goes up, you will have a better edge in the progressive payment BUC if you're buying BUC. Okay, then lastly is the rental demand. Alright, rental demand, although you are buying for your own stay, but rental demand impacts your future resale value as well.
Yes. Okay, so we have come to the end of our video. If you have concerns or have difficulty choosing units, do reach out to us because buying correctly is very important, especially in today's market. Yes.
Yeah, if you have no idea on what is a good product, feel free to drop us a text and we'll be more than happy to share with you more.
So most important, guys, you have to choose a safe property in this current climate. Yeah, safe property for you to enter and exit safely.
Yeah, because in the bull market, everyone is a genius.
Yeah.
In the bear market, you better be careful.
Definitely. So see you all at the next video.
Bye.
Bye.